right, let's bring in Kevin Green, senior markets correspondent, to help set up some of the other action today. Alibaba may be getting some love today. On the flip side, Marvell not. Take us through some of your takeaways from its latest earnings.
Yeah, we're seeing Marvell down about 16% here in pre-market trading, and that's actually after their earnings announcement, which for the most part was actually kind of mixed. Diane, we're kind of looking at it. The adjusted earnings per share actually beat the street's expectations, coming in at 60 cents. She was looking for around 59 cents, and the revenue came in at $1.82 billion. She was looking for $1.8 billion. So they beat both on the top and bottom line here. And when you're looking at the data center revenue, which is driving around 70% of their overall revenue right now, we did see growth of around 78% on a year-over-year basis. That did beat the street's expectations. But when you're kind of looking at consumer revenue, carrier infrastructure revenue, that came up a little bit light. Then also kind of looking at their outlook, they came in line with the street's expectations when it came to the top line growth for Q1 2025 guidance, around $1.87 billion. Plus or minus 5% according to them. The street was looking for 1.87 billion, but when you're looking at the adjusted earnings per share, their estimate for Q1 is sitting at 61 cents. Street was looking at 60 cents, but unfortunately the margins actually came up pretty light here. So it just kind of reflects that they are still spending money and they're still trying to monetize over the long term, but they might be eating into some of that profitability over the next couple of quarters.
Okay, so some of the concern margin. Another thing that stood out to me on the earnings call, I mean, this is going to sound positive at first. They said they anticipate continued sequential growth in the automotive end market. However, they said they expect that to be offset by decline in revenue from the industrial end market. They did say order patterns can be lumpy over any given quarter. Is that some of the issue here as well?
Yeah, definitely. I mean, on the industrial side, that has been fairly weak over the last couple of years, actually, and so we haven't seen a real bid, especially on the chip side of the equation for industrials. And knowing what the tariff impact or the uncertainty when it comes to fiscal and monetary policy, that could also hinder maybe future growth in the near term for the industrial sector. But when you're looking at automotive, that has been also kind of churning here. There's been some winners, there have been some losers. Now, they did make mention that they're not really too concerned about the tariff impact on their business for now, and it looks like where they're sourcing from, they may not also get any impact when it comes to tariffs. But once again, I mean, data center is really kind of the focus here, and rightfully so. They've done a phenomenal job, but once again, they're just trying to scale appropriately, and it seems like the market wanted to see a little bit more on that front.
Yeah, I did notice that there wasn't much about tariffs impact, so it looked like they're pretty, insulated when it comes to that. Speaking of scale, let's take a look at Zscaler. Shares higher in the pre-market. It also posted its latest quarterly results. Take me through your takeaways.
Yep, so we are seeing the shares up around 3%. Revenue did beat the street's expectations, coming in at $647.9 million. Street was looking for around $636 million, and the adjusted earnings per share came in at 78 cents. Street was looking for around 69 cents. The big thing here when it comes to this earnings announcement is going to be the deferred revenue, which came in at $1.88 billion. That's up 25% on a year-over-year basis, as well as calculated billings. That came in at $742.7 million, up around 18% on a year-over-year basis, both beating the street's expectations. And the reason why that is very important is because that's the kind of the indicator for future revenue growth over the next 12 to 18 months. And so if they continue to see that backlog of orders coming in, that once again can lead to greater top line as well as impacting the bottom line number there. So that's where you're seeing a lot of this optimism, even though if you're looking at their guidance for the next quarter on the adjusted earnings per share, came in a little bit light, but they did make mention that cybersecurity continues to see strong demand. And then also their integration of AI tools within their platforms has also been very favorable for their existing customers, which is also kind of expanding the amount of products their existing customers are using from Zscaler. So overall, pretty decent report here. Nice little pops to the upside this morning.
Certainly, you're seeing analysts boost their price targets off the back of this. Deutsche Bank boosting it to $230 a share, maintaining buy rating. JPMorgan Chase maintaining overweight. They're raising their price target to $250. Rosenblatt upgrading to a buy from a neutral, and they're adjusting their price target to $235 for Zscaler. All right, let's go broad market. Take me through what you're paying attention to on the levels for the S&P 500 for support and resistance, especially given what we're seeing in terms of futures action today.
Yeah, Diane, it seemed like we had a bright rosy picture yesterday, but we still have a lot of ground to make up when it comes to trying to reclaim some of these lost levels to the upside here. And unfortunately, you are seeing a little bit of a sell-off overnight in the futures market. I think there's a lot of news items that are really kind of hitting that. If you notice, Nvidia is getting hit right now, and I think that's based on that Singapore issue where there might be some funneling of chips over to China or what have you. But if you're kind of looking at the levels for today, what I have my eye out on is 57.10. Which is going to be once again kind of close to that 200-day moving average. Actually, below that, you're starting to see early flows there, and then to the upside, 5,900 here. So still a wide range that we're pricing out. That also complements the VIX still staying kind of sticky at around that 23, 24 level right now. And we just need to have some better news. We'll have some economic data here in the next 20 minutes or so that could readjust the markets either to the downside or the upside.
Could jobless claims really adjust the picture for today?
If you see a massive ramp up, I think it probably could have a little bit of an impact. We just had the Challenger jobs report that came out earlier this morning as well. A very small report that not a lot of people focus on. But they saw a massive increase in announced layoffs for the month of February. So that's something to keep in mind. And then also, Diane, import-export data today is going to be critical because that's going to update the Atlanta Fed GDP Now forecast. And we already know that that's coming in negative. If you do see a drop-off in exports, that also may be signaling that the front-running of tariff policy may have already had an impact for a lot of these industrial companies that really do focus on the export market.
All right, Kevin, thanks a ton for the setup for today. Kevin Green, Senior Markets Correspondent here on Schwab Network.